Today's interview is with Alex Breshears. Alex is a private money lender on real estate. So what that basically means is that she's the bank, which sounds pretty cool to me, right? Wouldn't you all like to be the bank? So if you like the sound of that, if you've ever thought about being the bank or a private money lender, today's a great interview for you. And if you've never thought about it before, this might open a few doors for you and spark some ideas for you. So as always, like and subscribe on Wrestling with Real Estate, the YouTube channel. Go to the WWRE podcast and give me a 5-star rating and write me a review if you think it's worthy. And I'm looking to speak to as many of you as possible. I love real estate. I love talking to people. So let's have a conversation about real estate and see if there's any way I can help you whatsoever. So there's a link in the description below, or go to wrestlingwithrealestate.com, the website, and sign up there. But before that, enjoy today's great interview and maybe learn something about private money lending.
Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we have Alex Breshears with us. Hey Alex.
Hello everybody.
How are you doing today?
I'm doing fantastic.
Okay, well, good. I nearly said thank you then. I don't know what I was thinking. But yeah, thank you so much for making the time to be on the show today. And I really appreciate it. We had some scheduling issues, but we made it happen. So that's awesome. Can you tell us a little bit about who you are, what you're doing, and what your current focus is?
Absolutely. So I am a private money lender for real estate deals here in the Hampton Roads area. So basically what that means for those that might not be as familiar with real estate is I get to play the bank. So when everybody's out there hunting for their deals, they get something under contract, they bring their information to me and say, would you be interested in funding this deal or giving me the money to purchase it, maybe give me the money to do the rehab portion of it. And then we offer, we have loan terms that everybody agrees upon as far as like points and fees and interest rate and loan length. And then, I consider myself a passive investor. So my definition of passive investor and active investor tends to be a little bit different than what the average, definition happens to be. So when I say passive investor, what I'm actually talking about is I have the ability to be as involved as I choose to be as a passive investor. So if I'm an active investor, that means I have to be involved. So, if you're a fix and flipper, you're an active investor. If somebody calls, the water line gets broken, the roof is leaking, you have to take the call. You have to deal with it that day. Whereas as a passive investor, I'm relying on my active investors to do that component, to execute the business plan that I essentially funded. And I could do that. I could be as involved as I wanted to. If I wanted to drive by the property every single day to see if the contractor's there doing their thing, I could. I don't because I just don't want to, but I could. And, generally if I get a text message a week, it says, here's the pictures, here's the tile that went in, here's the countertops been ordered, here's the cabinets have been installed. That's great. That's about as involved as I want to be. So that's kind of how I differentiate active versus passive, is I can choose to be as involved as I want and pretty much when I want.
I like that definition. That's the first time anyone's put it that way, but that's such an issue. Like you say, if you're a flipper, you have no choice, right? You can't be passive. Well, you could, I guess, but it's not going to turn out very well for you. But if you're a passive, you have complete choice of whether if you want to even a text a week, you might not even want that, right? You might just wait for the money to come in, and if the money comes in, great, that's all you do, right? You just make sure that the check is there every month. Or if you want to go by and see the property and talk to the guy that's doing the deal and see what's going on, you can do that every day. You could be there for 8 hours a day, I guess, if you wanted to. But
yeah,
and it's nice to have that choice, right? But there's, obviously there's big differences in too. So. But that's really interesting. It's a really interesting niche, right? The private lending space, because it's, when you talk about real estate investing startup, a lot of people, they talk about that evolution of where, maybe you start as a wholesaler, flipper, buy rentals, buy some multifamily, and ultimately, when you get to that point where you've maybe got a lot of money per se, that you go into private lending, because the banks, right? The banks usually aren't going out of business unless it's 2008, 2009. They're always the ones that win. It's like the casinos almost. The banks always win, the casinos always win. So what made you decide to go into the private lending route? Because obviously, as I mentioned, there's a ton of different routes that you could have gone with real estate investing. Why private lending?
So it actually evolved from what I used to do. So way back when, I'm a chemistry professor now, but way back when, I was actually a hard money loan broker. I had met a broker just at a local RIA meeting where my husband was stationed at the time. My husband's an active duty service member. And, he's like, oh, you're a science major. You should be good with like numbers and, putting puzzle pieces together. And I'm like, yeah, that's like literally what we do all day. And he was talking about, he's like, have you ever thought about, being some sort of mortgage broker where, you're working with an investor, you're putting the numbers together, you're looking at the deal. Does the scope of work make sense for what the house is looking at, in front of you? And I was like, no, but I'm pretty smart. I could figure that out. I'm sure I could do it. So he actually took me under his wing, and I did that for about 2 years. And, in something like that, you're meeting the investors out at the house that they want funding for. This was back before, digital signatures were a thing. Email was just sort of becoming fairly ubiquitous. So it was still very much a hands-on type of position. And this was in Florida. So, at some point you just get tired of being out in the heat and the sun. So I made the transition to being a conventional mortgage broker, where I still had that investor pool to pull from. But at this point, I was working with their buyers. So the fix and flippers that were originally coming to me for hard money loans were now coming to me saying, I have this buyer that needs, funding, needs to get a conventional mortgage for their house, might be their first home. And I was like, awesome, I can do that. And it's entirely in the air conditioning. And I'm like, on board with this. And in both cases, a lot of times it was something that I was going to school full time. I was in college full time. And, I was married, I had a household. It was something that I could work flexible hours for the most part. It was meet people in coffee shops and talk about loan programs, or, bring them to the office and have them sign paperwork. And I've always valued that flexibility. Being a military spouse, we could get a phone call tomorrow and say, guess what? In 2 weeks, you're moving across the country. Have a nice life. And I can either choose to follow my spouse, or I can just say, no, I'm staying here. But obviously I've chosen to follow my spouse for the last 20 years. So having that flexibility in my life has always been very important to me. We did have rentals. We owned homes, various places we've lived around the country. I will be completely honest with you. I thoroughly hated every minute of it, except for the moment we sold it when we closed. That was awesome. But other than that, it didn't suit our strengths. And I feel like a lot of new investors, you're kind of fed one of two options. You're going to be a buy and hold investor, and you're going to be a landlord. Or you're going to put pretty farmhouse sinks into ugly houses like they do on HGTV, and you're going to be a flipper. There's nothing else ever offered. And at the same time, no one's ever having the conversation with a new investor that says, what are your personal strengths? What are your personal goals? Do either of these models fit your strengths or your goals? Landlording did not fit my strengths. I can tell you that right now, because I was routinely expecting other adults to act like adults. And I was routinely let down, and it became exceptionally frustrating for me to be a landlord. So I just realized, I still enjoyed working in real estate. Going back to when I was a hard money loan broker, I worked directly for the lender, and I would often do some of the back office, cutting the checks to the various entities for closing. And so I got a good look at what the funding model was, and where the money was flowing, and what was going out, what was coming in. And I'm like, this makes so much more sense, because as a landlord, you're kind of hoping that nothing breaks and that your tenant pays rent, and you might clear $200 a month, if nothing breaks. But regardless, you're paying your mortgage every month on your investment property because you have equity in the deal. If you don't, and they foreclose, you've lost all your equity. You're not getting anything. So routinely, no matter how bad the tenant screwed up the house, no matter how, if the roof started to leak, if the tenant wasn't there, wasn't paying, whatever it was, the mortgage payment still got paid, like without hassle. That's what has to happen. The mortgage has to get paid. And I was like, this makes so much more sense to me. It suits my strengths. It's a much more collaborative environment where I'm talking with, like, I have 3 or 4 different investors that I work with here locally in my local market. And I don't have to go out and look for new deals. I don't have to go out and look for new borrowers because they're repeat customers. We can both come to numbers that work for both of us. And it's just like, hey, this deal's closing on Friday. I got dibs on that money because I have another deal I need funding for that's closing in another week. So don't let the cash go anywhere. So it's I don't want to say easy, but it's a simpler way for me personally. And it's also something I can do from anywhere in the country. So if my spouse gets stationed somewhere else, I can, as long as I have Wi-Fi signal and, cell signal, I can do this, because I know the market that I currently live in. I know the market I currently lend in, and I can do that from anywhere in the world.
Yeah, absolutely. And I think you touched on something that's so important there, that so many people don't understand. So for one, we talked about this before we did the interview. So for one thing, so many people don't understand real estate investing. But even then, when you get into it, people only barely touch the surface of what your options are, right? There's so many different options. And that's why I love real estate so much, because it's so open to you and your lifestyle, right? You can create whatever lifestyle you want as well with that, right? And it's also another thing that you touched on there, is that what is your strengths, right? What is your strengths and what is your weaknesses? And don't go do something that only feeds into your weaknesses, because you're setting yourself up for failure. But there's all this optionality with real estate investing. There's so many different things. So that's something that, when you get started, it's like you said, it's like, okay, a lot of people, they get fed wholesaling, right? If you have no money, you need to go wholesaling and blah, blah, blah. And that can work, but there's so many other different, you can go work for someone, you can do all this other stuff. And like you said, with real estate investing in general, is, you either do flips or you buy and hold, right? And that's kind of what it is. And that's one of the main reasons I like talking. I'm a big fan of apartment syndications, right? But it's not right for everyone, but I think it's an amazing model that so many people don't understand. And I think that's huge for people to try and for people to understand what is available there and what you can do, and try and fit it into your life and what your strengths are. What do you want your life to look like, and what are your strengths are? And try and figure that out first, rather than thinking, let me get into real estate and then get to what my goals are, So it's I think that's huge. So, but also you pointed out so many great things there about private lending, right? For one, is that it's that flexibility. You can do it from anywhere in the country per se, right? It'd be nice to go see the property, but if you've built relationships and you have good lenders and you have those relationships, you can do it from anywhere, really, right? Correct me if I'm wrong.
Oh, absolutely. I mean, if you have a track record with those borrowers, and those borrowers are going to be proactive in stopping the problems. I mean, as well as anybody, real estate, something's always going to go wrong. You just have to expect something's going to go wrong. So are you lending to people? They're going to step up and go, hey, this happened, but I'm correcting course, and this is how I'm correcting course, and this is what we're doing to move forward, and I'm going to make you whole. That's the type of borrower I want. So if I find those people, then yes, I'll happily fund your deal over and over and over again, because we have a symbiotic relationship with each other. I can't be a lender without borrowers, and borrowers can't really do their thing without lenders, whether that's a bank or me. So I definitely feel like having that more collaborative approach is more feasible, I think, for a lot of people. Because, for example, when I'm working with, I consider myself a real estate investor. I'm just on the other side of the table. But when I'm working with another investor, we both want the deal to close. We both want the house renovated. We both want the house to sell. We both want the house to refinance, whatever the plan happens to be. Whereas I think when you're in that, that contractor and investor, play, if you're doing a fix and flip, for example, they want to do as little work as possible for as much money as possible, and you as the investor want to pay them as little as possible and get them to do as much work as possible. So it tends not to be your goals are not aligned. Whereas when you're doing private lending, like I said, your goals are very much aligned. You both want the same thing, and you just form this kind of buddy relationship with other investors, and they can refer you more business. Or, I'd go over, if it wasn't COVID, I could go over to their houses and have cookouts with them on Sundays, and, talk to their family and interact with their kids. Like we talk every day. It doesn't necessarily have to be about real estate. It's just, hey, what's going on? And that to me, that's a much happier space. I'm a extroverted person. I enjoy having relationships with people. So that fits my strengths much more than something where, I have to hard bargain and I have to negotiate and I have to bluff that I have another bid lower than there. That just doesn't play to my strength. It's not something it doesn't suit my moral compass, shall we say.
Right. Yeah, that's great. I think for people listening now, they might be thinking, well, private lending being the bank, that sounds, intimidating and something I maybe, can I do this myself? So maybe you could talk us through the basics of how it works and, what kind of fit it is for certain people.
Oh, absolutely. So it always starts with knowing the type of property and the type of borrower that you want to lend to. So literally, I have been pitched elephant farms in Texas. I've been pitched solar farms out in the Midwest. And I'm like, no, I only fund fix and flip single family homes in this small area. So you need to know. So if you zero in on what you want to lend on, then learn the other side of that. So if you're going to fund fix and flips, for example, you better know, at least something about construction. You better know something about timelines for getting things done. You better have some idea of what the scope of work. So if somebody sends you a scope of work that's 3 pages long in Excel, but they're like, I'm going to get all this done for $20,000. You got to go, no, I don't think so. Let's have a talk. So I always start with, for the education component of it, to do the underwriting for it, always learn the type of deal you want to lend on. So if you want to be one of these investors that loans on BRRRRs, for example, to buy, rehab, rent, refinance, and repeat, make sure you understand that model from the active investor standpoint, because they will pitch you everything. If you just say you're a private money lender, they're like, I have something that I need funded. So you need to make sure that you understand from the active perspective what they actually have, and do they understand their numbers, and are their numbers reasonable? Are they have good expectations? So for example, I had a borrower come to me that had a $60,000 rehab, and that wasn't necessarily the problem. The problem was he was 100% going to do all of the work himself, and he was going to get it done in 45 days. And I'm like, you have a full-time job, a wife, and 3 small kids. At the end of 45 days, you're not going to have one of these things. You're either not going to have a renovation, you're not going to have a wife, or you're not going to have the kids. Like, there's just not enough time in the day to get $60,000 worth of renovation done in 45 days as a one-man band, especially if you don't have a construction background. If you're just a YouTube contractor, that's not going to happen. So it's being able to have those conversations and have that expectation. So that's where I would say have people start number one. So if you're already an active investor, you're honestly 3/4 of the way there. The capital part, everybody thinks you got to start with like millions of dollars. You really, really don't. So for example, certain markets, I work with an investor that's in West Virginia. He's in Charleston, West Virginia. He can buy a total turnkey rental for $50,000. So, and then he can throw a renter in there for $850 a month. So if he comes looking for financing, I'd be like, well, yeah, I know the rent's going to get paid. Like the mortgage is covered, easily covered, sometimes twice with what the payment's going to be. Sure, that's a no-brainer. I'll lend on something like that. So, I mean, you just really have to kind of know what you're looking to fund. So if you want to be in the first lien position, so that would be you're the first mortgage on a property or first deed of trust. If you happen to live in one of those states, you can go, and if you don't have, $100,000, even if you don't have $200,000 to invest, but you still want that first lien position, you could always look to work in some of those markets. Some of those markets are in Pennsylvania, New York, like I said, West Virginia, Ohio. All of those states have those markets where you have investors that are buying homes for $10,000 to $40,000. So you could fund those smaller deals in those markets. Obviously, you need to learn that market too, but you could definitely fund those deals in those smaller markets, have that first lien position, and then start collecting whatever it happens to be. So if you fund a deal that's $40,000 in purchase price and your interest rate is 12%, they're paying you 1% on, $40,000. So you're just sitting back collecting your $400 a month. So, I mean, that's pretty decent return on your money, considering, the stock market's up, the stock market's down, you never really know. Could the company cut their dividends and you're not getting your dividend payment from your stock? So it's just a nice, easy way to have some passive cash flow. The other bonus is if you want to look at this more as a business, you can go set up your legal entity, whatever that is, an LLC, an S Corp, a C Corp, and then start establishing business credit. So you could start establishing lines of credit with credit unions or other trade lines that will help further expand the capital you have available to you. So for example, if you have a line of credit from your bank that's at 8%, but then you can turn around and loan that money out, 1 or 2 times throughout the year and make it 12% or 14% or 16%, you're making money on that spread between what you're borrowing it for and what you're then turning around and lending it for, which is literally exactly what banks do. I'm just doing it on a personal level. So you don't necessarily have to start with, the hundreds of thousands of dollars. Yeah, that makes it a little easier if your goal is truly passive income. But you can also broker, you can set up a trust and have multiple like family members and friends put together capital in a trust. And then you are just kind of the broker for it. And you make points, doing the origination points or something like that. You could actually put together a whole syndication that's just going to be a mortgage fund, since you have experience in syndication. So, you're paying your investors 8% or 10% on their money or whatever it happens to be, and you're turning around and loaning it out at a higher rate. So there's tons of different ways to put together the capital. It doesn't necessarily have to be entirely self-funded.
Yeah, that's great. That's what I love about real estate. And again, we talk to people all the time on real estate. Everyone always seems to think the same thing. People who are outside of the bubble of real estate is that you need money. I don't have money to do real estate. I don't have money. Oh, okay, great. That's not an excuse. That's not a reason not to invest in real estate. And it's almost when you tell them that you don't need money in real estate that they think you're crazy. I think that's crazier. That's crazier than telling them that they should invest in real estate, that you can invest in real estate with no money. And they're like, no, nobody does that. That's not possible. No, that's a scam, or that doesn't really happen. I'm like, no, I know at least 50 people that invest with no money, that none of their own money, and they're super successful and they've created this life for themselves. So it's amazing what's available. And, the private lending space is no different. Like you talked of so many different strategies that if you want to be successful and you want to do this and you decide that you're going to create this better life for yourself, you can go out and do that. Yeah, like you said, raise money from friends and family, and you give them 8% and you get 12%. You get that 4% without a penny of your own money, right? And you do that. So I think that's just really interesting, and such an interesting concept for people to know. And going back to what you talked about, doing that loan, right? If you do a 12% loan on $40,000, you make $400, right? So it's different to rental as well. That's $400. You don't have anything really to pay, maybe the taxes, whatever that is. But take that aside, right? You don't have a property management company to pay. You don't have insurance. You don't have taxes. You don't have repairs and maintenance. You don't have to save anything for CapEx, and it's just that goes straight into your bank account or in your pocket or whatever. So I think that's something interesting for people to consider as well. I'm sure some people might be thinking though, as you heard them say, I know why, but who would pay 12% interest rate when you can go to the bank now and get 2.5%?
I have so many people. So I know everybody, and I think this kind of stems from lack of financial education. For the little bit that they do get, it tends to be about the interest rate. And interest rate is honestly one of the last things to worry about. And I mean, for example, like I only fund fix and flip. So my borrowers only have the loan out for 3 or 4 months. So it doesn't, for them, it's money that they didn't have to begin with. And it's allowing them to close on a project where they might clear $30,000 or $40,000 in 3 or 4 months. So if they have to pay me $3,500, $4,000 for that 3 or 4 months to have my money, they will do that all day long because they know they're going to clear $30,000 or $40,000 when the deal sells. What they are interested in, and this is again going back and knowing the active side of what you want to lend on, what they are interested in is they don't want to make monthly payments, because they're already having so much of an outlay of cash doing the renovations. Maybe they had to catch up if they took a deal subject to, they have to catch up the previous owner's mortgage. So the fix and flip model is very cash flow intensive at the beginning. So I was like, okay, you know what? For, if originally it was 10%, what I'll do is I'll do 12%. And, you don't have to make any monthly payments and I'll just roll the interest into your payoff. So they might get it where they aren't making a single payment to me in 3 or 4 months, and they will happily sign up for that all day long because I'm meeting a need. Like, I don't necessarily need the cash flow on a monthly basis right now. So if it helps them and I can earn a little bit extra in return, everybody's happy. Like, they are thrilled. They are more than happy to pay 12% because in their mind, that's the least of their concerns. They want to know how long they can have the money. They want to know when the payment frequency is going to be. They want to know when they can get their disbursement done for the renovations. And as long as those 3 things are in sync, it wouldn't matter. I mean, obviously within a certain degree, if I charge them 50%, that's a different story. But 2, 3, 4, 5 different percentage points are not going to matter to this particular group of people because they know what the bottom line is. They are doing this to make money. And if they didn't have access to these funds, they might not be able to do that deal. And it's still, a lot of times, it's still cheaper than doing just a straight hard money loan. And it tends to be a lot less paperwork, a lot less questions, because I can do my own underwriting in-house because it's my funds, I'm responsible for it. So, if we think we're going to close, we're going to close. And then anybody who's ever worked with a hard money loan broker, it's like, oh, well, this company at the last minute is having a problem with your income because you're commission based. They want you to have that for 2 years. Well, for 6 weeks ago, I was a commission based person. Why is this suddenly an issue 24 hours before closing? Whereas, when you're working with a private money lender, you're really getting to know that person. Both of us, I'm really getting to know the active investor. They're really getting to know me. So if I build a reputation where I say I'm going to fund this deal, then they know I'm going to show up to the closing table and fund this deal for them. So it's just really, it's more of a partnership without having that legal, JV joint venture partnership in place, but it really just, mechanically works in a very similar fashion to having a partnership.
Yeah. And I think, like you touched on there, it's that they'll gladly lend at 12% if they're making 30%, right? It doesn't make sense. And I think another service that you provide that maybe people wouldn't realize is that you fund, how quickly you guys fund within a few days. Whereas if you go through traditional financing through a normal bank per se, and a lot of this stuff won't even qualify for bank financing, that's another reason why they go through, is you're talking 30 days probably at best, right, from start to finish, that you'll be able to fund that deal. So then you have to go through the bank. Yes, you might get a lower interest rate, but you can't, they're buying deals quickly. They're buying deals with cash, and they need that cash within a couple of days to be able to get these deals that wouldn't probably qualify for regular bank financing because the house is a mess, right? That's the reason they got a good deal. That's why they're buying it as a fix and flip. It probably doesn't have a kitchen, or doesn't have, definitely doesn't have carpets. I think that's one of the stipulations that most banks have, that they has to have carpet or some kind of flooring.
Yeah.
So it doesn't have all that, And then another thing, back to I think you were talking about the rental, right? If someone's buying a house for 40,000 and it's renting for 800, and if they, a lot of times they don't even make loans that small, but even if they do, it can be challenging. But if you're again, it goes back to that, you've got to know the numbers. If you're borrowing at 12%, but that property is giving you a 16% return, well, that's a no-brainer. You'll do that all day, every day, and you don't have to use your money. So I think people hear the 12%, and like you said, they get so caught up in the interest rates, right? People always talk about, I want to pay off my house because I don't want to pay that 3 or 4% money for the rest of my life. And when you look at it over the course of 30 years, I'm paying an extra 100,000, right? Okay, yes, that's true. But another way to look at it is, if you pay it off now, look at that equity you have in that house. If you invest that somewhere, if you can get an 8-10% return on that, as opposed to paying a 3% interest rate, aren't you so much better using that money otherwise? So I think people get so caught up in that interest rate that is just a tiny, tiny small part of what real estate investing is, and how money works as well. So I think that's a really interesting point. Something you talked about there is, maybe you can kind of talk a little bit, is about what's the difference between a hard money lender and a private money lender?
Oh, absolutely, because I get this question a lot. So the distinction isn't necessarily official, but what I would consider a hard money lender or a hard money broker is they are basically shopping, you are the product, they are shopping your deal, your buyer profile, the property's profile, to possibly various lenders and saying, do any of these check enough boxes where you will close? So they are not making the decisions as far as underwriting goes. They are not making the decisions as far as funding goes. Will they do it? Won't they do it? They are shopping you as the product. When you're dealing with a private money lender, it's our own funds. So if we want to loan out the funds, it has to make sense for us. It's us making the decisions. It's us calling the bank to transfer the money, via wire. It's all us. So it's our funds, whether it's borrowed funds, our personal funds, pooled funds, syndication funds. We are the ones doing the final decision making. So that's generally the big difference as far as how things are going. And some of your listeners might be thinking, well, why does that make a difference? Like, I don't care where the money comes from as long as it shows up on closing day. Well, for example, like I mentioned earlier, if you as the product are being shopped around to various lenders, it might come down to the wire and the lender sees something, the underwriter sees something that they don't necessarily agree with. And because you don't check all their boxes, you are not going to get the funding. Whereas if we discover something like that, obviously we're going to pay attention to what your income is very early in the game. But I mean, if we discover something, we can usually talk to the borrower directly and go, hey, I noticed last year you made a whole lot more than you are this year. What's going on? How are you making up for that? Are you comfortable making your mortgage payment and this mortgage payment? Like, we can have an honest person-to-person conversation and go, here's the risk I see as a lender. What could we do to mitigate that risk? Versus an underwriter that's in an office somewhere that's just going, oh, you don't check the boxes for credit score. You don't check the boxes for, the LTV is too high, so we need to lower your loan amount. Or we think the ARV you submitted is too high, so we're going to lower your loan amount, or whatever the case happens to be. It's just a matter of who controls the funds and who's making the decision for that funding.
Very interesting. Yeah. It seems like private lending is a lot more relationship based, right? If you have a friend that and that you've done 5 flips with, it might not matter what the deal looks like so much, right? You're gonna obviously take a look, but you trust that person, they've earned that right, and you might not put too much underwriting. Whereas that person goes to a hard money lender, like you said, all that matters is the numbers, and the track record is not so important. They're going to underwrite every last little detail. So I think private lenders, for one, have a lot more flexibility, right? Because you said it's your funds and you kind of decide. So yeah, I think that's something for any potential fix and flippers out there to kind of consider. So when you're starting out as a private lender, right? How do you meet people? How do you meet people that want to find deals, that want to fund deals with you? How do you find these people?
Oh, if you are an active investor looking for a private money lender, that's usually the question that I get asked most frequently is, where do I find these people? Because it tends to be what I consider like a shadow industry. So if you think of the major educational forums, like Bigger Pockets, for example, they have entire series of books on how to be a landlord and how to do a fix and flip and all these various things. And the only way private lending's ever mentioned is go find a private lender to fund your deal so you have less money out of your pocket. But there's nothing past that point. And, private lenders on the flip side are a little hesitant to come forward because when you think about it, especially now with COVID, you can't really meet anybody face to face. You're realistically talking about wiring funds to somebody who you met on the internet, as strange as that sounds. So you really have to have, there's obviously safeguards you can put in place to a certain degree, but it's still investing. There's still a level of risk. So a lot of private lenders are not going to come forward and say, hey, I have funds available, who's interested? Because you're going to get a feeding frenzy. It's going to be terrible. So what generally happens is people are referred to other active investors. So if I'm a private lender and, none of my, normal investors have anything for me, they can say, oh, but my other partner, Barry, he might have some fun. He might have a couple projects that need funding. Let me introduce you. And you can make what I call a warm introduction. Say, Barry, this is Alex. Alex, meet Barry. You two might have something in common to talk about. And that's generally how you meet people that are doing private lending. And on the flip side, I also kind of advocate private lending as an option for real estate investing from the very get-go. So you don't have to do the real estate hazing of dealing with being a landlord or dealing with being a fix and flip. You can go straight to private lending. So for example, if you have a self-directed IRA or you have a 401k that you have the ability to direct where those funds go. You could then be your own private lender and say, look, I want to work with Barry. I want to fund his fix and flip here in Hampton Roads that he's got. And I trust him. I like his business model. Let's do this. And then you can then become a private lender that way. Because I feel like there being more private lenders on the planet does not make my job more difficult. It's a rising tide lifts all boats. So if there's more private money out there, that means there's more private money for active investors to use to make them more prosperous. There's more private individuals that are pretending to be the bank. And like you said, the bank and the casinos, they always win. So you're basically bringing that money away from Wall Street and back to Main Street. So I can spend, if we're doing that $40,000 analogy, I can spend that $400 a month in my own community. I can pour it back into my business and loan out additional funds. And since I fund fix and flips, I'm helping put people to work, because if those investors couldn't do those fix and flips without my funding, they're putting crews of people to work. They're putting landscapers and roofers and property managers, all those people to work. So I can make a difference in my community while getting paid to do it. It's a wonderful business model, but I'm kind of biased.
No, I like it a lot. I'm very interested in what you say. Some people might be thinking, well, what is the legality behind this? Do you need a license? Do you need to get a broker's license, or can you just go out there and loan to people?
Well, I'm not a CPA and I'm not an attorney, but I always advocate, if you're interested in doing this, the very first conversation you need to have is with a real estate attorney to get, if you want to do it as a business, to get your LLC or your S Corp or your C Corp set up. And then they can also draw up the documentation, such as the mortgage, the deed of trust, the promissory note, to make sure all of that's within guidelines. But the general framework for what our limitations are as far as lending, as far as like going back to the interest rate conversation, that's going to be different from state to state, sometimes from different municipalities. But the overall grouping of laws is called USury laws. So as long as you are within the USury laws of where the property is located, it's pretty much whatever you can negotiate between the two parties that everybody agrees on. A lot of hard money lenders, for example, and private lenders will only lend to an LLC, because at that point it's considered, a commercial loan. It's my business loaning another business money. So the USury laws tend to be a little more forgiving, as in the interest rate can be higher, the fees can be higher, things like that. So that's something else to consider. So if you know what the USury laws, and that's something a real estate attorney should be able to figure out, or at least answer, for you, what are the upper limits, what are the USury laws? Now, since you are loaning your own funds, there's no real licensing, at least in Virginia, there's no real licensing that I can just go and say, you know what, hey, do you need $50,000 to do this purchase and renovation? Sure, here's your $50,000. The legality can be a little bit different if you decide to broker funds, or if you're building a trust or anything like that. That's something to have a conversation with your attorney. And obviously, if you're going to be doing something along the route of building a syndication model for a mortgage fund, you're definitely going to have at least an SEC attorney involved in those situations. And they should be able to answer, do you need licensing in a particular state in order to do this level of funding?
Yeah. I think I'll just repeat that, just that neither of us are offering legal advice. I think you've got to say this stuff these days, right? Neither of us are legal professionals or anything. This is just a fun conversation for fun's sakes, right? There's not any kind of legal advice in case we get a letter in the mail from someone trying to sue us or something, right? So, but going back, so someone has maybe $100,000 in the bank and they're thinking, okay, active real estate investing scares me. I don't want to do a fix and flip. I don't want to fix a toilet at midnight, which never happens, by the way, but that's what people tell themselves. So they think, okay, private lending would be a good way to go. And they start going to these meetups, and they met a local fix and flipper, for say, that's successful, has a good track record, and he brings them a deal. What should they look for in that deal, and when deciding whether to loan to that person?
I would say the number one thing, and this is going to be harder and harder as we move through whatever recession we might be having here with COVID, is going to be the after repair value. So if they're buying a house, if they have it under contract for $100,000 and they say they need to put $50,000 worth of work into it, but it's only going to sell for $120,000, then obviously that's going to be a problem. You're upside down in the deal. But if they have a $100,000 house that they need to put $50,000 worth of work into, but you're fairly confident it's then going to appraise for about $300,000, that's 50% loan to value or LTV. So that makes it far more comfortable for me. Whereas if they stop paying and I have to own that house, I can get my money back out even through the foreclosure process and the costs involved and all that. I can get my money back out of that house. Whereas if it's not going to be worth, 150,000, or it's not going to be worth 200,000, even that would make me a little squeamish. Like, oh, we're going to be into this house for 150,000. It's only going to sell for about 200,000. That's what I would consider a skinny deal, which is not a lot of spread between what you owe and what it's going to sell for, especially in a fix and flip, because once you start tearing into walls and redoing plumbing, there's always going to be something else that needs to be fixed. So fix and flips go over budget quite easily. And also in the COVID timeframe, your end buyer still is going to be relying on conventional financing. So with conventional financing, the standards have gone up during COVID. They've started to relax a little bit. But what would have done the job quite well at a 680 credit score, maybe the lenders are now requiring 720, or they want more income or they want more reserves. So it can be a little harder for the buyers. Like, there might be tons of willing buyers, but the problem is, can they get the funding? Can they get the conventional financing in line? So the hold times might be a little bit longer. Like, there's always going to be something going wrong. So I would say, get a really solid idea of what the property is going to be worth when it's done. And then also get a really solid idea of, has this borrower done this type of property before? So someone might consider, someone who owns 5 turnkey rentals as an experienced investor. And that's not to say they're not, but if they come to me wanting to do a $50,000 renovation and all they've ever bought is 5 turnkey rentals, that's a completely different business model. Like, that's great. That's wonderful. You want to do that. But, do you know anything about construction? Have you ever done project management? Is there something else, again, going back to that risk mitigation? Is there some conversation that we can have? Is there some angle we can change about the deal where the risk is lower, not only for me, but also for them, because they don't want to go through the process of foreclosure because they have put their own money into the deal just like I have. So again, our goals are aligned when you're a private lending investor and an active investor. So you want to have those conversations. What is your track record? Can they prove it? Can they show you HUD-1 statements? You can go look at the county courthouse, for the public records. You can see when the property was bought because you can see the deed was recorded. You can see when the property was sold if they're a fix and flip, because again, the deed's going to be recorded, transferring title from your borrower to whoever their buyer was. So you can kind of prove the track record and say, okay, yeah, you did 5 fix and flips in the last 2 years. I'm comfortable funding, a 6th fix and flip for you because you've got a proven track record executing those deals. And the other question I get asked a lot when we talk about track record is, what if I'm a new investor? What if I'm just getting into the game and I don't know, I don't have a track record? Well, that's where I tell them that real estate doesn't have to be a one-man band. Like, it actually works better when you have a team environment. So you know what? Bring on a JV partner. And then they go, oh, I don't want to split my profits. Okay, well, you know what? You're stepping over $1 to pick up a dime at this point, because you are going to learn so much from an experienced investor doing the same business model you're trying to execute. It's worth giving up 50% of the profit or 75% of the profit, because if you're doing it alone as an inexperienced investor, there might be no profit. There's going to be a lot of fix and flip investors that tell you their hardest deal was oftentimes their first deal, and they are happy that they broke even on their first deal, because like I said, there's just so much that can possibly go wrong. So if you bring in other people, other partners that have that track record that would satisfy someone like me as a private lender and go, oh, you know what, Barry, you've never done this, but Tom has. So we're going to have Tom help you and sign on the dotted line with you for this particular deal. And then we'll fund that based on Tom's track record because he's someone on your team. So I always advocate new people, when they say, oh, private money won't give me a chance. Well, there's good reason. We want that track record. We want to prove it. And you can do that one of 2 ways. You can do a couple deals via hard money and show us that you did this business plan successfully, or you can bring on team members, joint venture partners, however you want to structure it, to prove that their track record, that they've done it before in the past.
Yeah. And And it's just like all real estate. It's all a team sport, right? If you don't have that experience, find that experience. If you don't, whatever missing part of the puzzle there is, just go find someone and plug it in. And you said it's so true that people just want to. One deal usually won't make you rich, right? But that what you learn from that one deal and that getting that ball rolling from doing that first deal, even if you have to give up 90% and you only get 10%, it's those other deals that's going to make you rich and wealthy. Is going to lead to you to where you want to be. So I think that's fantastic advice in all real estate, not just in raising money. So as I mentioned before, this show is called Wrestling with Real Estate, and I always like to ask some wrestling themed real estate questions. So the first one would be, what would your wrestling name be if you had to pick a wrestling name?
I would have to be like the Red Ripper, because I feel like I like to just rip apart some common preconceived notions about real estate investing and private lending in general. So I like the Red Ripper.
The Red Ripper, okay. For anyone listening to the podcast, I'm guessing it's because you have red hair as well.
Yes,
right? Yes. Every wrestler has a special move. What would your special move be in real estate?
Oh, I would have to say, I would have to have something like the pyramid. You know, like you ever see the cheerleaders that, you know, stand on each other's backs and form this little pyramid. And then whoever's at the top gets to jump off, and then they go back to the bottom of the pyramid. Because I feel like going back to that team sport approach for real estate, you know, I didn't invent the wheel. I just created my own wheel. I used techniques and different things and learned from different people and put together my wheel to make, you know, my car go. So I feel like real estate is very much that team sport where you can build yourself upon other people and then, you know, take a dive off the top and then help someone else build back up to the top of the pyramid.
Cool. Very cool. What's been the biggest body slam you've taken in real estate?
Oh, that would easily be one of the rental homes we had. So we bought the property, in all fairness, we bought the property as our primary residence. The Navy was supposed to send us to another base in Florida. Instead, they sent us to Whidbey Island, Washington, which is about as far from Florida as you can possibly get and still be in the United States. And they told us this as they were packing our luggage and our household goods on the van to be driven to another base in Florida. And so our original plan was to have some family and friends live in our house. We had horse property because I'm a horse person, and literally we had to pivot in the last moment and find a place for the horses and turn this into rental property because we couldn't afford to keep the house vacant for 2 years. So in that process, you know, it was horse property. So it had fencing. It was kind of out in the middle of nowhere. We found a property manager that was referred to us by some other investors in the area that had homes somewhat in the same area, but they had zero experience with this type of property, just none. They didn't know anything about horses, maintaining property, maintaining grass, nothing. And we found out later that they did zero screening for the tenants that they moved into the property. The tenants just destroyed the property, took up all the baseboards, they took up all the flooring. They ended up being pit bull breeders. And I love pit bulls. That's like my breed of choice, but I don't need 12 of them. And, you know, they were clogging the AC with all the dog hair because they also weren't cleaning anything. And it was just nightmare after nightmare. And then when the tenants left, they actually took all the wood from the fencing and the barn, like the side of the barn, with them. And then somehow got my phone number, and then were texting us threatening messages that we weren't returning their deposit. And I was just done. You know, I was just, this is what being a landlord is. Just kill me now, because that'll be faster than the torture I'm currently going through. And, you know, there were a lot of things wrong, you know, like hindsight's 2020. You know, there were a lot of things wrong that was not necessarily rental property in the first place. But again, we bought it never intending it to be that way. It's just, that's what happened. So, I mean, we chose the wrong exit strategy. We trusted the wrong people on our team. We didn't really vet the property managers enough. Like, you know, this is special property. Do you have experience? You might lend, you know, manage in this area, but have you lent, you know, deal with horse people are a whole different breed. Horse property is a whole different breed. And it was just, they just destroyed the house. I mean, just absolutely destroyed the house. So we ended up selling the house to an investor that was going to then basically rehab it and turn it around and do a fix and flip on it, because we just, by this point, we had no mental energy left. We did not have enough capital ourselves to basically renovate the entire house, you know, put in all new flooring, all new baseboards, paint, clean, you know, everything that we required. So that was just that was a fast lesson in learning how to pivot and, is your pivot appropriate? So just because you can turn 90 degrees and move forward doesn't mean that's the direction you need to go. So that was a good life lesson. So I feel like you learn more from your mistakes than you do your wins. So that's definitely something I've learned from that whole entire process.
Yeah, I'm sorry that happened to you guys. Was there a moment you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
Oh yes, so I loved Angel Williams, because that's actually I had the same thing. When she said, when the first time you go to wire money, like when I called the bank, even though I'm wiring it to an attorney's office, and you call the bank and you verify the wiring instructions of the attorney, you double, triple check the numbers. By the end of this 10-minute conversation with the bank, when you go to wire funds, they have you thoroughly convinced you've just sent your entire life savings to a Nigerian prince. Like, they really do. They do everything they can to scare the absolute bejesus out of you. And so after the end of that, I just had this god awful, sick feeling in my stomach the first time we wired funds to a closing attorney, to fund a deal. It's like, what did I just do? And then I'm calling the closing attorney, and, I can't get a hold of the person that gave me the instructions, and this person's out to lunch, and you're just freaking out for a solid 30 minutes until this person calls back and says, yeah, we got your funding. You're like, oh, thank God, so.
I'm right there with you on that until you get that call, and it's like, when you speak to that person, yeah, we've got it. They're so cool and calm, no big deal. And you're sweating buckets and you losing hair. And yeah, I can completely, I was laughing through all of that. I completely relate. Well, Alex, thank you so much for sharing. It's been an absolutely fascinating talk. I don't know if you could tell, I was really interested in this subject matter myself. And there's so much stuff. I feel like we only scratched the surface of kind of what goes into it and what you can learn and what your options and stuff like that. So maybe for people who have you've kind of started that interest in them, how can they get a hold of you to find out more, and to find out more what you're up to and to learn more in general?
Absolutely. So I actually created a Facebook group called Private Lending Lessons, and it's literally nothing but an educational and networking group where people come together and talk about learning how to do private lending. Learn from other people that are doing private lending, because what works in my market might not work in Alabama, might not work in Idaho, whatever it happens to be. So it's a way for private lenders, because again, it's that shadow industry. It's a way for private lenders to come forward safely and talk about what they are doing, in their private lending. I'm on that group all the time, so people can reach out to me at any point on the group. I'm happily send someone my Calendly link and book some time one-on-one. I'm also on LinkedIn, so if someone can send me a message on LinkedIn. But definitely, if they want to learn more about private lending, the Facebook group Private Lending Lessons is a really good resource. And I'm also happy to refer. I haven't really found any great books, but if I have a couple books that I've tried that I've offered to other people. But any sort of resources, if I happen to know a private lender in that market that you work in, I'm happy to make those connections, because I feel like human capital is far more important than having actual financial capital. So even if I don't fund in your market, or I don't fund one of your deals, I'm still happy to add value to you in any way that I can.
Awesome. Cool. Well, thank you. I'll put all those links in the description below so people can reach out. But Alex, thank you so much for making the time. It's been, like you said, really interesting talk today. You brought up so many good points about why private lending is a good fit, and not only stuff that people can learn of to apply to private lending, but in real estate in general. So I think it is a great talk, and I think a lot of people hopefully will learn. And we might have a lot more new private lenders after today's conversation.
Hey, that's awesome for real estate.
Yeah, absolutely. Cool. Thank you so much.
Thank you.